A very good afternoon, friends. I'm Sanjeev Singhal, Central Council member and Chairman Auditing and Assurance Standard Board. On my behalf and on behalf of my Vice Chairman, CA Vishal Bhai Doshi, I welcome you all to the webinar of AASB, which is on checklist on standards on the auditing. The webinar is co-hosted along with the Panipat branch of NIRC of ICI. I welcome the Chairman Panipat branch CA Mitesh Malhotra ji, and I also welcome two speakers for the day, two esteemed speakers for the day, CA Rajiv Saxena ji and CA Deepa Agarwal ji, who will be joining us shortly. Friends, this happens to be the 99th program of AASB for this council year. So in less than 5 months, AASB has already done 98 programs, and this is the 99th one. And overall, more than 50,000 members have joined these programs. They have been benefited. Today's webinar is on the checklist on standards on auditing. You may be aware that recently AASB has come out with the checklist on standard on auditing and also the working paper formats or the working paper templates for the benefit of all members so that they can use them. And these are illustrative, of course. A member will have to change it according to the situation. Today, the expert speakers will be covering SA 600, SA 610 revise, SA 620, SA 700 revise, 701, 705 revise, 706 revise, 7110 and 720 revise. Over a period of time, we'll be covering all these standards on auditing in the checklist form. I'm sure that the members would be immensely benefited by the wisdom and knowledge of both the esteemed speakers. And I'm really happy to welcome the moderator, Chairman of the Panipat branch, CA Mitesh Malhotra ji. Before we invite the two learned speakers, I would request my moderator for the session to say a few words, and then I will request the moderator to hand it over to Rajiv and Deepa ji. Thank you, and over to you, Mitesh bhai.
I think it is muted, sir.
नहीं आ रही है आपकी आवाज, मितेश भाई बोलिए. मितेश जी बोलिए. मितेश जी आपकी वॉइस ठीक से नहीं आ पा रही है.
Yes.
Mitesh ji, you may like to shift to another network if it is available.
Sir,
थोड़ा सा बेटर था. आई थिंक मितेश जी थोड़ा सा प्रॉब्लम है शायद नेटवर्क. बीच बीच में आ रही है, जरा बोलिए. विल ट्राई.
now it is clear, sir.
ब्रेक हो रही है मितेश जी आवाज बहुत.
Is it?
मैं ऐसा करता हूँ, पहले राजीव जी को
Okay,
इनवाइट
sir.
करते हैं, देन राजीव जी के बाद फिर आप इंट्रोड्यूस कीजिएगा. सो आई वुड रिक्वेस्ट नाउ राजीव सक्सेना एंड दीपा अग्रवाल जी, both are special invitee of the Auditing and Assurance Standard Board, and they are contributing extensively. Both are our esteemed members to kindly deliberate on the topic. First, I'll request Rajiv to go ahead. Over to you, Rajiv.
Thank you, sir.
Sir, now is it clear, sir?
बिल्कुल क्लियर है मितेश भाई. चलिए पहले आप शुरू कीजिए, फिर राजीव.
Okay, sir. Okay. Shall I start, sir? Okay. Sir, good afternoon to all of you. I welcome you all on today's webinar on checklist on standards on auditing organized by Auditing and Assurance Standard Board of ICI. It is a very important and useful topic in our practice. I deem it a great honor to be the part of this webinar. Due to the COVID-19, the pandemic, it had become very hard to get together for continuing professional education programs. But with the great efforts of the committee for members in practice of ICI and with the great help of all the delegates, it would have become possible professional education programs and continue home meeting or webinars. We are very members in practice of for of ICI the opportunity to host today's webinar. First of all, I would like to extend sincere thanks to CA Sanjeev Kumar Sehgal ji, Chairman, and CA Vishal Doshi ji, Vice Chairman of Auditing and Assurance Standard Board of ICI for gracing today's webinar. Thank you, sir, for your very interesting and thoughtful, provoking address. Our most distinguished speakers of the day are CA Rajiv Saxena ji and CA Deepa Agarwal. CA Deepa the Pradhan of IRC on my own behalf, extend a very hearty thanks to the honorable delegates who took out valuable time of your busy schedule. I request our speakers, say Rajesh Saxena ji, to please start his deliberation and share his expert views with us. Sir, over to you, sir.
Thank you, Sanjeev ji. Thank you, Mitesh ji, for the introduction, and thank you for this opportunity to make this presentation and engage with our esteemed members. So, as you rightly mentioned, I think this is a very good initiative by the AASB to issue these working paper templates of formats and the checklist, because this will enable our members to kind of use these standards in their audits, maybe a little uh, with more smoothness and seamlessly. Uh, so this will increase the efficiency, maybe the way the audits are being done, and I think with this initiative, I'm sure the members will be in a better position to meet with the requirement of these standards, and also meet with the requirement of all stakeholders who are always you know uh, uh, mindful of the audit quality which we deliver on our various engagements. So I have a small presentation that I'll just share. Just give me a second. I hope the screen is visible to all. So I'm covering. Not visible. Okay. Is it visible now? Okay. Thank you. So I'm covering the 600 series of the standard, and accordingly the checklist which have been designed to implement these in practice. 600 series is about using the work of other auditors as well as other auditor experts. So a brief background on the standard. As you all know, these standards have been issued by AASB to which are as a performance benchmark, because those who are new in the profession, they have always seen these standards in place, and they had the opportunity of using them or implementing them in their audits. But those members who come with a lot of experience, and maybe when they started into this profession, they became member. These standards were not there, and probably in those period, I think the wisdom of our partners, seniors, and how it is disseminated to the teams below, was the key way to gain experience and gain expertise in doing audit. But these standards, I think the benchmarks are already there, and we can use these benchmarks to deliver the quality which is at par with the with the expectation of the regulators and all stakeholders. Recently, in the month of June, AASB has issued the checklist on the standards on auditing, which is a very great initiative, which will enable all the members to, and these checklists have been issued on all 38 standards. Uh, and this is a great initiative to enable members to be able to implement these standards, because sometimes these standards conceptually are clear to the members. They are aware what is needed to be done, but how exactly they implement this in practice and how do they educate their teams to implement these standards in execution of the audit sometimes becomes challenging, and this checklist will enable them to implement these standards in a seamless manner. This checklist is illustrative in nature. This checklist should be used in conjunction with the essays, guidance note, and related pronouncements, and needs to be suitably modified, at Chairman Sir has mentioned, to suit the facts, circumstances, and nature of the entity under audit. This checklist is neither supersede nor is a replacement of any guidance or pronouncements or standards issued by ICI. We are also advised to exercise the professional judgment while using this checklist. So maybe I wanted to make this message very clear, because while this checklist is a good enabler, but it has to be used in conjunction with the standard and other pronouncements. This checklist is an excellent document, I think, with readily usable work paper, which has certain elements to enable maybe the capture the information which is necessary, and which becomes useful when you review these engagement as a reviewer, independent reviewer, or maybe an external review also. So client name, working paper reference, period which is under audit, who has prepared the checklist, when it was prepared, purpose of the checklist, how to use the checklist, the guidance is there, who has reviewed the checklist before it has been made the final document forming part of the audit documentation. Responses are to be given in yes, no, not applicable, but many a times I have seen that the teams are not the orientation is not given to them in the right manner, and they only record the answer in yes, no without proper justification. Most of the time, it is very important to justify your answer, which is in the form of yes, no, or not applicable. These essays covered, so I'm covering 3 standard essays: 600, 610 revised, and 620. 610 is about using the work of another auditor. We all know that there is a concept of principal auditor and other auditors. So the auditor of the holding company, while accepting the engagement, if that holding company has multiple subsidiaries and components, then probably they have to assess whether what will be their responsibility in terms of accepting that engagement, whether they will be able to review or perform enough work on that engagement, maybe cover enough scope to be able to issue on the consolidated financial statement. So this standard helps them to provide guidance how to go about it. Essay 610 revise is about using the work of internal auditor. It deals with the external auditor's responsibilities using the work of internal auditors. This includes using the work of internal audit function in obtaining audit evidence, and using internal auditors to provide direct assistance under the direction, supervision, and review of the external auditor. I think the second situation is a little different and not so often used, but the first bullet, using the work of internal auditors, obtaining audit evidence, is to some extent a large extent is used widely in our engagement. The third standard is using the work of auditors experts. So it deals with the auditor's responsibility regarding the use of an individual or organization's work in a field of expertise other than accounting or auditing, when that work is used to assist the auditor in obtaining sufficient appropriate audit evidence. For sake of clarification, this standard does not deal with the situation where the engagement team includes a member with expertise specialized area of accounting or auditing which is dealt with SA 220. And this auditor's use of the work of an individual or organization possessing expertise in a field other than accounting or auditing, whose work in that field is used by the entity to assist an entity in preparing the financial statement, which is dealt by the standard, which is SA 500. I would like to give you some examples on these to clarify when this, so when do we use SA 620? I'll give you some examples. For instance, the valuation of complex financial instrument, if an external expert has been deployed to deliver on that, and probably you using the work of the additional expert to the extent of valuation of complex financial instrument, this standard will come into play. The actuarial valuation of liabilities associated with the insurance contracts or employee benefit, this standard will come into play. The estimation of oil and gas reserve. So if you have got a report which is a key kind of evidence for the purpose of financial statement, then this statement or this standard comes into play. So these are the examples which are given in the standard itself. I'm just highlighting so that you can correlate. The valuation of environment liabilities, the interpretation of contracts, laws and regulation. So these are the external expert domain, which are covered into this standard. As an example only, there could be many. The standards or the situation where the engagement team includes a member with expertise, specialized area of accounting, which is SA 220. These are the areas which are like, for instance, your internal expert, like you have used one of your team members from the tax department or tax team in helping you in accounting for deferred income taxes, or expertise in the method of accounting for financial instruments. Maybe if you're using your internal experts, probably that is covered in SA 220. But otherwise, this 620 deals with the kind of expertise which we talked about, which includes valuation of financial instruments, actuarial valuation, estimation of oil and gas reserves, and similar expertise. If we come to SA 600 about using the work of another auditor, acceptance as a principal auditor. So consider if the auditor's own participation is sufficient to be able to act as the principal auditor. We all know that there is a guidance available in the standard, as well as for the listed companies, the SEBI's regulation or the LODR guides you, what should be the coverage or what should be the minimum coverage which should be covered by the principal auditor. And you have to see that how do you cover that, and to the extent you are using the work of other auditor or component auditor, then what is the guidance, what exactly you are supposed to do. So this checklist is designed to help you comply with this standard and ensure that you have completed or achieved the documentation and obtained the evidences which were necessary to demonstrate that your own participation is sufficient to be able to act as a principal auditor. The principal auditor's procedures include to see if the principal auditor has visited the component to examine the books of account and other records of the company, and the special circumstances under which these financial information and components are operating. To plan to use the work of other auditor, which means this should be envisaged and discussed at the beginning of the engagement, not towards the end, so that you can identify the involvement of the component auditor. To perform procedure to obtain sufficient appropriate audit evidence that the work of the other auditor is adequate for the principal auditor's purpose in the context of their specific assignment. So, when you consider that your own participation is sufficient to be able to act as the principal auditor, how do you do it? You consider maybe the materiality of the portion principal auditor audits. This is one of the criteria. Degree of knowledge about components. So how much you do know about component, how critical that component in the overall financial statement, what percentage of revenue which is constituted of the of this component, what kind of risks which are associated with the component, which and what is the weightage of those risks at the consolidation level, at the group level. Risk of material misstatement of component audited by others. So these are the assessment which you have to do to see that how much you will be able to involve yourself in obtaining the sufficient evidence to be able to issue an opinion on the on the consolidated financial statement. So if the component is being audited by a member of the Institute of Chartered Accountants of India, the principal auditor would normally be entitled to rely upon the work of such auditor. Though the new standard 600, which is being issued globally, probably that has maybe a different connotation. But the way the SS 600 is being structured in India, I think we can definitely place a reliance on auditor. But we have to get involved into the process from the planning stage itself. What is your expectation from the component auditor? That should be forming part of the instructions which are issued to the component auditor. You should be very clear of your expectation, the kind of deliverables, the scope of testing, the risk which you foresee with related to specific financial items in the component. So all those things should be very well articulated in the instructions, so that there is no ambiguity, or there is no scope for interpretation when you are expecting the component auditor to deliver on the way you want them to, and probably which helps you to kind of use the work of the component auditor as a sufficient audit evidence to be able to deliver on your obligation, on your responsibility on the consolidated financial statement. To discuss with the other auditor the audit procedure applied or reviewed, a written summary of other auditors' procedures and findings, which may be in the form of a completed questionnaire or checklist. And to see if the other auditor has significant findings, so how they have been reported, what cognizance you have taken of those findings, how they have been dealt with in your consolidated financial statement, what is the impact on the overall financial statement of these findings, to see if there are matters or audit findings that may affect the financial information of the component. So if component is significant, and if the findings are significant enough to affect the financial information of the component, then it is your obligation to go deeper into these, to see if the other auditors, other than a professionally qualified auditor. Normally in India, audit is being done by, this is definitely so. So in India, audit is being done by a chartered accountant, which is a member of ICI. But if you are auditing a component which is outside the jurisdiction of India, in an overseas territory, in a location, and there, if the local regulation allows maybe a non-chartered accountant to be able to provide audit services, then probably you will have to make that assessment, and then you'll have to take that call that how much you have to engage with such professional, to make sure that you have enough audit procedures performed on that component to enable you to include those findings or those results as a sufficient audit evidence. To maintain auditors' working papers, the component whose financial information was audited by others, their significance to the financial statement of the entity as a whole. So these are the questions which you have to answer, and accordingly you have to confirm your assessment on that also. The names of the other auditor, any conclusion reached that individual components are not material, that also has to be documented. The procedure performed and the conclusions reached have to be documented. If the other auditor's report is other than unmodified, which means it is a qualified opinion, then how you have dealt with that report, that has to be documented. Coordination between the auditors, this is very important, to see if there is a sufficient liaison or communication channel established between the principal auditor and the other auditor. To see if the other auditor, knowing the context in which his work is to be issued by the principal or used by the principal auditor, has coordinated with the principal auditor. So, I would say frequent engagement with the component auditor might be important and critical in these kind of situations, when the component is critical and significant, and you are using the work of other auditor to form your opinion. So it may also require maybe to visit the other auditor, to have an in-person meeting, to engage with their teams. Maybe nothing stops you from doing that. Maybe to make sure that your expectation are well understood, by the component auditor in order to deliver them to your satisfaction as a principal auditor. Reporting consideration: to see if the principal auditor concluded based on his procedure that the work of the other auditor cannot be used and the principal auditor has not been able to perform sufficient audit procedures regarding that financial information of the component audited by the other auditor. In that situation, to see if the other auditor issued or intended to issue a modified audit report. In these two situations, you have to be very clear that how are you going to deal with this kind of situation, because if you have not been able to use the work of the other auditor, and probably you have not been able even to perform your own work on that component to derive enough sufficient audit evidences, then it may call for a modification of the report, or to be included in your report. Similarly, if the other auditor issued and intended to issue a modified audit report, and that modification is significant, then if you want to discuss that, you want to engage with the auditor, how have they arrived at that conclusion, what is the materiality which is involved, how pervasive that modification is, and accordingly you'll have to take the call in your main report on such modification. Division of responsibility: to see if the principal auditor's report, it states clearly the division of responsibility. So I think our standard allows us to state in our consolidated audit report that such and such component with such and such revenue and has been audited by other auditors, and the principal auditor has relied on the reports of such auditor in issuing the opinion. So division of responsibility is very important and has to be clearly stated in the principal auditor report. To see if the entity has internal audit function. So this was on 600. I will take the question together maybe when we conclude that this session, and I'm coming on the 610, which is using the work of internal auditor. This section only applies if the entity has an internal audit function in place. So if the entity is small, it is not mandatory for them to have an internal audit. Then this standard has nothing to do. This does not come into play. But if the entity has an internal audit system, whether it's internal or external, then this standard comes into play, and this checklist becomes very handy in delivering on the expectation of this standard. To see if the entity has internal audit that we have discussed, to what extent the work of the internal audit function can be used. Has the external auditor determined whether the work of the internal auditor function can be used for the purpose of the audit? Has the external auditor evaluated objectivity of the internal auditor? This is very important, because if it is an internal audit function, let's say there is an internal team of internal auditor, and they are reporting to a financial controller or to a CFO, and probably no findings can be included in the report unless the CFO approves it. Probably, I'm not sure whether the internal auditor will be able to achieve the objectivity. So how independent the internal audit function within the organization is, if the internal auditor does not have access to those charged with governance to reach out to with his or her findings, then probably I'm not sure how much reliance we can place on such internal audit function. So it is very important to evaluate the objectivity of the internal auditor. How do we do that? You have to assess whether the internal audit function or internal auditor is free from biases. There is no conflict of interest. There is no undue influence of others to override professional judgment, as I mentioned the situation with the reporting conflict, and conflicting responsibilities. If internal auditor has been given in charge of some control, and at the same time he is only responsible to see whether those controls are working efficiently or not, and accordingly he or she is issuing the report, of course these are conflicting responsibilities, because he is the process owner, at the same time he is monitoring it also, so they may not be able to place reliance. So objectivity of the internal audit function is very important. Then the second comes has the external auditor, and this is in the form of the checklist, because why when you say that have you evaluated objectivity, you have to check these things on the conflict of interest, biasness, and the reporting conflicts and things like that. And you have to document in the checklist that this is the way you have evaluated the objectivity, and you have concluded that yes, the internal audit function or internal auditor's report or findings can be used as a basis or in our statutory audit responsibility. Second would be, has external auditor evaluated competency of internal audit function? So, what is the background, educational background, the experience, of the internal auditor, whether he or she would be in a position to deliver the expectation of the internal audit function, because we all know that a statutory audit is more based on the materiality and based performed on the sample testing basis, but the internal audit function is supposed to be deeper. And if the person responsible for that does not have enough experience and competencies to deliver on that kind of expectation, then it may not be, easy for you or advised for you to rely heavily on this kind of internal audit function. Next is whether the internal audit function applies a systematic and disciplined approach. There is no ad hocism so the plan is well structured, the approach is well defined, periodicity is defined, the areas which are to be covered on each month, every month, those which are supposed to be covered on quarterly on a rotational basis, those which are to be covered once in a year at least, whether that kind of approach is been consistently followed. Otherwise, relying on that internal audit function may be pretty risky, and you might have to engage yourself in such a kind of assessment. Determining the nature and extent of work of the internal audit function that can be used to see if external auditor has considered the nature and scope of the work that has been performed as is planned to be performed by the internal audit function and its relevance to the external auditor's overall audit strategy and audit plan. If internal auditor is going to cover certain things which are not critical for your statutory audit for the given period, then even if that internal audit is robust or is very well delivered, you may not be able to use that work at all, because it does not cover none of the risk areas or none of the critical significant class of transactions or financial items which are part of your statutory audit scope or assessment. To see if the external auditor plan to use less work of the internal function in following circumstances. So if you identify these kind of situations where the judgment is involved in planning and performing audit procedure, assess risk of material misstatement is higher, internal audit functions, organizational status, and relevant policy and procedure does not adequately support the objectivity of the internal auditor, or level of competence of the internal function is low. In these kind of situations, you may like to place very less reliance on the internal auditor's work. To see if the external auditors evaluated whether in aggregate using the work of the internal audit function to the extent planned would still result in external auditor being sufficiently involved in the audit, given the external auditor's sole responsibility for the audit opinion expressed. So while you're using the work of internal audit, maybe especially with respect to control testing, and you might use some of the samples used by the internal auditor if they have performed some control testing on behalf of the management, and you can use some of those samples for validation, so to see that what is the extent and what is the quality of these results, so you have to assess that how much you can rely or you can use the work of the external auditor, and how you will still have to perform certain obligation as external auditor to be able to express opinion in order to complete the documentation to demonstrate that you have enough audit evidence. To see if the external auditor, in communicating with those charged with governance, an overview of the planned scope and timing of the audit in accordance with the 260 revised, communicated how the external auditor has planned to use the work of internal audit. So you have to keep the audit committee and those charged with governance informed that, and in order to facilitate that or enable that, you have to engage with them at the beginning of the year, that what is your expectation and how the internal audit scope and periodicity has been have been structured, has been approved by the audit committee, How would you like to use that? You have to keep the audit committee and those charged with governance informed of your assessment of that. Using the work of internal audit function to see if the external auditor plans to use the work of the internal function, to see if the external auditor read the reports of the internal audit function relating to the work of the function. That so many a times practically we experience practical difficulties also, that the internal audit report becomes available at the very fag end of the completion of the statutory audit. In such situation, you should definitely make sure that you have read and understood the latest available internal audit report and the repercussions and the consequences of the findings in such reports, whether it will impact any of your audit procedures or extent of checking, substantive procedures, or maybe you have to expand your procedures to cover certain risks which have been identified in the. So the the point which I'm trying to make here is, if you do not have a 31st March internal audit report, I think you should, while you should insist for that, but you should always use the latest available report to see what is the direction of that report, what is the approach of the internal auditor, what is the quality of findings and the objectivity with which these findings have been reported and stuff like that. So that will help you to see how best you can design your own audit procedures to make best use of the internal audit function which has been instituted. To see if external auditor performs sufficient audit procedures on the body of work of the internal audit function that external auditor plans to use to determine its adequacy for purpose of audit, including evaluating whether the work of the function had been properly planned, performed, supervised, reviewed, and documented. It's very important actually, because while the internal audit report will be the final outcome of the function, but how the planning was done, how the work was performed, how the work of the internal audit team was reviewed internally as a process of monitoring and stuff like that, that's making sure that this has been done in the most objective manner. Sufficient appropriate evidence had been obtained to enable the function to draw reasonable conclusions, and conclusions reached are appropriate in the circumstances, and the reports prepared by the function are consistent with the result of the work performed. So you have to go really deeper, to if you want to place reliance on the internal audit findings and internal audit function, because it is not just the report which should be material to you. It is the process under which or through which this report has been issued or generated. How robust the monitoring process is, how objective the approach was, and how well the findings have been supported by the work performed and the evidences obtained by the internal audit function. Then only you would be able to use this function maybe to best of your advantage and efficiency. To see if the nature and extent of the external auditor's audit procedures are responsive to the external auditor's evaluation, the amount of judgment involved, as we mentioned in the previous slide, the assessed risk of material misstatement, the extent to which the internal auditor's functions, organizational status, and relevant policies and procedures are defined, the level of competence of the function. To see the external auditor evaluated that the external auditor's conclusions regarding the internal audit function and the determination of the nature and extent of use of the work of the function for purpose of audit remain appropriate. So to see if the external auditor external auditor is prohibited by law or regulation from obtaining direct assistance from internal auditors, I think this, I'm not aware of any law which prohibits statutory auditors from obtaining direct assistance from internal auditors in India, at least. But since this standard has been adopted from the international arena, so there might be some jurisdiction where this could be. There are some certain restrictions with respect to how you use that work. But I don't think there is a regulation restricting obtaining direct assistance from internal auditors in India. But having said that, this is part of the standard. And converged or adopted from the global standard. Coming to the next point, and determining the nature and extent of work that may be assigned to internal auditors and the nature, time, and extent of direction. supervision review that is appropriate at the circumstances as the external auditors considered, amount of judgment and planning and performing relevant audit processes and evaluating audit evidences, risk of material misstatement, objectivity, and level of competence. So I think there are certain things which are repeat, but these are important because these are the key and premise, you know, the way you are going to place reliance, you know, whether or not you can place enough reliance on the work of the internal audit function. So that's why it is, even if it is repeated, but these are critical and important. To see if the external auditor used internal auditors to provide direct assistance to perform procedures that involve judgment in audit. I think this is very important because if you're using the internal audit function as a direct assistance involving judgment in audit, then probably you know, the documentation has to be even more robust. Relate to higher assessed risk of material statement, whether the judgment required in performing the relevant audit process or evaluating the audit evidence gathered is more than limited. You know, so you have to step into the shoes and see whether your judgment would have been different. Relate to work with which the internal auditors have been involved and which has already been or will be reported to management or those charged with the governance by the internal audit function. Relate to decisions to external auditors' works makes in accordance with the essay regarding the internal audit function and use of its work or direct assistance. To see if the external auditor in communicating to those charged with governance an overview of the plan, scope, and timing of the audit in accordance with SA 600 260, communicated the nature and extent of plan, the use of internal auditors that we discussed in the previous slide, but this is a specific question, and how we have achieved this has to be documented in this checklist. To see if the external auditor evaluated whether in aggregate using internal auditors to provide direct assistance to extend plan together with the planned use of work of the internal function would still result in the external auditor being sufficiently involved in audit, given the external auditor's role, sole responsibility for the audit opinion express. So while direct assistance is not prohibited, but it has to be very it is a very informed call which has to be taken by the external auditor or the principal auditor or maybe the external auditor, because in such situation it may not be easy or it may not be very you know seamless to deliver or to demonstrate that you have got enough, you have done enough to be able to have been in a position to issue opinion on the financial statement. So while direct assistance is not prohibited, but it has to be used in a very special situation with a very special safeguard. Using internal auditors to provide direct assistance, continued to provide direct assistance for purpose of audit for using internal has obtained written agreement from an authorized representative to the entity that internal auditors are allowed to follow the instruction of an external auditor. Obtain written agreement from the internal auditors for the confidentiality of matters instructed by external auditors that they will keep confidential specific matters as instructed by the external auditor. So, you know, you will arrive at this situation of seeking direct assistance with these safeguards with only when you have been able to assess the objectivity of the internal audit function. You know, if you have seen that the people involved or the team or the level of expertise which is there, you know, what is the reporting framework, how much is the independence which has been given to the internal audit function, you know, to be able to deliver to these kind of expectations. So, so these are the safeguards which needs to be taken by the external auditors if they decide to use the internal audit function as to provide direct assistance. To see if the external auditor directed, supervised, and reviewed the work performed by internal auditors on the engagement in accordance with SA 220. You know, then he becomes the part of the team, actually, engagement team. You know, and in that case. He has to deliver on the same expectation that you will expect as an external auditor from your own team, from your own manager. So, you know, that becomes very important. And that's why probably sometimes it is not easy to control, you know, external people to deliver on these kind of expectations. And that's why it is not so very commonly used, but it is definitely available with the safeguard. Documentation with respect to C610, if the external auditor uses the work of the internal audit function, then include the evaluation of the functional organizational status and relevant policies and procedures adequately support the objectivity of the internal. So not only you have to assess, you have to document that also, so that you can, you know, you can demonstrate, yeah, that your evaluation was supported by, you know, reasonable analysis, supported by facts and figures and data. The level of competence of the function, if the function applies a systematic and disciplined approach, how you have evaluated how you concluded that the approach applied is systematic and very disciplined. The nature of the extent of the work used and the basis of that decision, the audit procedure performed by the external auditor to evaluate the adequacy of the work used. If the external auditor used internal auditors to provide direct assistance on the audit, in that case, determining the need for an auditor's expert, sorry, if the external auditor uses internal auditors to provide direct assistance to the audit, then probably in that case, the responsibility of documentation even increases further. As I mentioned, then that such internal audit function or internal audit team assisting you in direct assistance become the part of the engagement team, and you apply the same yardstick which you apply to your own team in terms of documentation, in terms of review, in terms of monitoring, in terms of training and everything. We are reaching to the next standard, which is the using the work of auditor's expert. If it is necessary to have expertise in field other than accounting or auditing to obtain sufficient or appropriate audit evidence, then you have no choice but to use an auditor's expert. In determining the use of auditor's expert, has the auditor considered the following? So this is a part of the checklist, and the expectations are whether management has used a management expert in preparing the financial statement, the nature and significance of the matter, including its complexity, the risk of material misstatement in the matter. The expected nature of procedures to respond to identified risk, including the auditor's knowledge and of experience with the work of experts in relation to such matters, and the availability of alternative sources of audit evidence. So this is what you have to assess and respond in this checklist. The nature, scope, and objective of the management expert's work, whether the management expert is employed by the entity or it's a partly engaged by it to provide relevant sources. So that shows the level of independence which to place the reliance on that. I'm not saying that somebody, an expert who's employed by the entity, may not have objective in his or her delivery. Maybe take the case of insurance companies. You have an appointed actuary which is on the uh, roles of the company, but they are very independent, and probably they run their own independent assessment, answerable directly to the regulator, IRDA, because IRDA directly comes into play to review their work, and they appoint external monitors or mentors, to keep for hand holding. And so what I'm trying to say, even if the expert is employed, maybe can still be very objective, but you have to assess that the extent to which management can exercise control or influence over the work of the management expert. So that is very important, because if management has a control or bias on the work of, then probably placing reliance on that work and not doing enough your own procedures may be risky. The management expert's competence and capabilities, whether the management expert is subject to technical performance standard or other professional or industry requirement. So if there is a regulator which is regulating the expertise of the expert, for instance, the Institute of Actuary is responsible for performance and training and evaluation of the actuaries, maybe just for an example, but there could be other, domain expertise which are subjected to review by the specific regulatory authority within that expertise. Any controls within the entity over the management expert work. So what are the control mechanism, monitoring, review process, review mechanism which has been put in place on the expert's work? Nature, timing, and extent of audit procedures. If the auditor has considered following matters in determining the nature, timing, and extent of procedures, the nature of matter to which that expert's work relates, the risk of material misstatement in the matter to which that expert's work relate. If it is material item, and that is a key item on the financial statement, which can impact the decision of the user of the financial statement, you have to exercise due diligence on that. The significance of the expert's work in the context of the audit, right? For instance, I gave you some example, the valuation of complex financial instruments, if it has been done by an external expert or internal expert, and this constitute a major financial item or leverage on the overall financial statement, then you have to be very thorough in your assessment, and this standard will help you to deliver on your expectation or on the expectation from an external auditor in this situation. The auditor's knowledge and experience with previous work performed by the expert. So if this is something which is a recurring ritual or recurring practice every year, and you have already used the work of such expert, you can draw the references from your previous engagement with such expert. How robust the work was, how well it was delivered, how well documented it was, the assumptions and everything which have been used, they have been well documented, supported, and validated. So you can always use your own knowledge and experience with the use of such experts which you have experienced in the past. Whether that expert is subject to the auditor's firm's quality control policies and procedures. So, that also has to be evaluated. If it is an internal expert, then you'll have to see that what kind of quality control is applicable and how it has been complied with. In the following situation, the auditor applied different or more extensive procedure that may be required. The work of the auditor's expert relate to a significant matter that involves subjective and complex judgment. So in such situation, you may have to have your own independent assessment, or you may have to engage with another expert in that area to see whether the judgments, are reasonable or well supported. The auditor has not previously used the work of the auditor's expert and has no prior knowledge of that expert's competence, capabilities, and objectivity. So you'll have to apply extensive procedures. You'll have to, in order to draw that comfort which you want to draw, to be able to be using such work as an audit evidence for the purpose of issuing your opinion. The auditor's expert is performing procedures that are integral to the audit rather than being consulted to provide advice on an individual manner. So if it is an integral part of the audit, then you have a different take on it. Otherwise, if it is only consultation, then it becomes a limited intervention. The expert is an auditor's external expert and is not, therefore, subject to the firm's quality control policies and procedures. So, or if the expert is an auditor's external expert, and that therefore it is not subject to firm's quality control, then you have to see that how you will extend your procedures to draw more comfort of such external expert. In such situation, the situation of an external monitor of such experts, or there is a monitoring authority which monitors the work of such experts and grade them on their competency, or review their work and give the satisfactory kind of reports and stuff like that on their past work, and these kind of things come into play if such expert is not part of your internal team and is subject to firm's quality review. The competence, capabilities, and objectivity of the auditor's expert, to see if auditor evaluated that the auditor's expert has the necessary competences, capabilities, and objectivity for the purpose of audit. For evaluating the competences, capabilities, and objectivity, following will come handy: whether that expert's work is subject to technical performance standard, as I just mentioned, other professional or industry requirement, the relevance of the auditor's expert's competence to the matter for which that expert work will be used, including any areas of specialty within that expert field. So within that expert field, one person who will be expert in, let's say, in valuation of financial instrument, but within the financial instrument, there is a lot of derivative, and probably that such person has not, has previously worked on that. Probably he may not be completely ready, and how he has delivered on those expectations, this could be an area of assessment actually. The auditor's experts' competences with respect to relevant accounting and auditing requirement, whether unexpected event, changes in conditions, or the audit evidences obtained from the results of audit procedures indicate that it may be necessary to reconsider the initial evaluation of the competences, capability, and objectivity of the auditor's expert as the audit progress. So you have a prior experience of working with the audit expert. You were very happy, comfortable using his or her work in your previous engagement, and you want to do the same for this year. But this year there is a report on on the previous work done by such expert, issued by the competent authority who is monitoring the quality of such experts, and that report says that there was a negligence on the part of that such expert in delivering certain responsibilities in certain areas and stuff like that, and you come to know about that report. then in such situation you will have to make sure that you have not ignored that and whether such situation or such weakness or vulnerability exists in your own case, and then accordingly you have to take call that how do you rely on the work of such experts. For evaluating the objectivity of the auditor's external expert, has the auditor inquired of the entity about any known interest or relationship that the entity has with the auditor's external expert that may affect that expert's objectivity or independence? You have to inquire this to the extent possible. You can check it yourself in interviewing people, interviewing various process owners. Discuss with an expert any applicable safeguards, including any professional requirement that apply to that expert, and evaluated whether the safeguards are adequate to reduce threats to an acceptable level. So if there is some applicable safeguards, you have to see whether those have been exercised. Auditor agreed in writing when appropriate on the following matters with the auditor's expert: the nature, scope, and objective of the expert's work, the respective roles and responsibility of the auditor, the nature, timing, and extent of communication between the auditor and the expert. It is same as using the work of other auditors. So you have to issue instructions if you have to engage with the discussion to make your expectation clear. The need for the auditor's expert to observe confidentiality requirement of relevant ethical requirements applicable to auditors for those imposed by law and regulation. If no separate written agreement has been entered into with the auditor's expert, whether the evidence of agreement included in any one of the following: planning memoranda or related working papers such as the audit program, and the policies and procedures of the auditor's firm, which has been issued as a standard document to such expert before engaging with such expert. Evaluating the adequacy of the auditor's expert's work, to see if the auditor has evaluated the adequacy of the auditor's expert's work for the auditor's purposes on following. To see if the auditor performed following procedure to evaluate the adequacy of the auditor's work: inquiries of the auditor's expert, review of the auditor's expert's working papers and reports, corroborative procedures, so cross-referencing and cross-checking information and results, discussion with other experts with the relevant expertise, if you want to do that independent check and assessment, discussing the auditor's expert's report with the management. To see if the report of auditors is expert presented in a manner that is consistent with any standard of the auditor's expert profession or industry. So it should not be a report which is not usable and which is not clear. So it has to be well drafted document with the scope and the process and the procedure performed and the documentation, evidences, and everything. Clearly expressed, including references to the objective agreed with the auditor, the scope of the work performed, and the standards applied, based on an appropriate period, and take into account subsequent events to the extent relevant or wherever relevant, subject to any reservation, limitation, or restriction on use. If so, whether this has implications for the auditor. So if the expert has cited multiple limitations which limits the capability or the ability of such experts to be able to be objective in issuing the opinion or the conclusion on such work, then you as an external auditor have to evaluate whether you can use only such report as a primary audit evidence, or you will have to perform independent procedures also, based on appropriate considerations of errors or deviations encountered by the auditor's experts. So, have they been discussed and kind of addressed the way the work has been performed? When an auditor's expert's work involves the use of significant assumptions and method, has the auditor evaluated whether they are generally accepted within the auditor's expert's field? So assumptions should not be completely out of the blue. Actually, they should be normally the series of assumptions which are assumed or which are taken or which are used in such kind of work. You'll have to do that work or assessment for sure, consistent with the requirement of the applicable financial reporting framework, dependent on the use of specialized models, and consistent with those of management, and if not, the reason for and effects of the differences. So if the management has used certain different assumptions. The expert has used entirely different assumptions. How do these two gel together? What is the inconsistency between the two? How the two assumptions can be completely, poles apart. So you have to definitely do that assessment and accordingly take a call on the using such work or the adequacy of such a conclusion. To see if the auditor determined that the work of the auditor's expert is not adequate for the auditor's purposes, in that situation, they'll have to either independently perform or engage another expert, or maybe put a limitation on their report to that extent. The reference to the auditor's expert in the auditor's report, whether the law or regulation require auditor to refer to the work of an auditor's expert in auditor's report containing an unmodified opinion. So again, I'll give the example of insurance company where you use the work of a appointed actuary. They certify the adequacy of reserves and various evaluation for the purpose of financial statement, and you rely on that, and you make that statement in your main report, and you also write that your opinion is not modified to that extent. So that is what the expectation of the regulator is, and that's what you do. Whether the auditor has made references to the work of an auditor's expert in the auditor's report because such a reference is relevant to an understanding of a modification to the auditor's opinion. Very important. So that is all, maybe from my side. I try to make it as objective, not going into questions of the checklist, but making the concept very clear and the very purpose and the key messages from these checklists. I'm happy to answer any question which the participants may have. Thank you.
Thank you, sir. Thank you very much. During the audit, we have to use work done by others. In order to form an opinion, we have to use the work of another auditor. We have to use the work of interpreter. We should be very careful while you work with others.
Mitesh, I'm sorry, I'm not able to hear you. Actually,
the precautions be taken and in a very smooth and understood that how and we use the work of others. If any member has any query, it can ask at the end of the second session. We may take last 10 to 15 minutes as a query session. Now, not taking much time, I request our second guest speaker, Deepa Agarwal, to please start her delivery and share her expert views with us. Ma'am.
Thank you. Thank you, Miteshji, and thank you, Rajiv, for taking us through the entire 600 series, which is very comprehensive, and you presented in a very simple and understandable manner. So I'm sure everyone will kind of appreciate the kind of expert involvement, especially the expert involvement. I think that is something very important. And the use of the work of the other auditor is always something very important for us because it's a specific carve out, as you mentioned in your presentation. So, so thank you for giving this opportunity. And I would also like to say, yeah. Chairman sir and Vice Chairman sir, probably they're not on the call, but I just want to say thanks to everyone for giving me this opportunity again by doing this webinar. I think, yeah, we are very much used to these webinars now. So I'm just sharing my screen and well, just a second. Yeah. Yeah. Miteshi, can you just confirm if my screen is visible? Thank you. So I think I would not repeat what Rajiv has already explained, but I would at least like to touch base that the standards in auditing are the mandatory standard, as all of you are aware of. And what I'm thinking in the next 1 hour or whatever, next 50 minutes, I will try to talk about some of the important aspects on the reporting requirement, because again, for all of you, you will be busy with a lot of work when all these unlisted and the private companies, the statutory audit has to be conducted. And at the end of the, your audit, your ultimate deliverable is your audit report. So the audit report is one deliverable which is very, very critical and largely relied by the stakeholders, investors, regulator. which means your ultimate deliverable, whatever you have done through the entire audit, be it your planning or be it your execution of audit procedures or be it using the work of the expert, whatever you have done till now, and finally you have to issue a report. So I would like to also mention one thing that, while I'm thinking that, I've also put together some slides, but it's very important to understand the thought process why these checklists were prepared. So I was also involved with the AASB in this checklist project and got the opportunity to work on the checklist. So in this, if you see now, when you will fill the checklist, for example, to give you an example on the reporting, the first standard SS700, you will have to go through each of the requirement as specified in the auditing standard. So till now, probably what approach could have been followed by many of the professionals, and because you are issuing the report year on year, you can straight away go to the auditor's report format. Okay, this was the report which I issued last year. Let me see what has been changed this year. Okay, I have to report on for example, on the audit trail is a new requirement. So okay, fine, I'll have to report on the audit trail as an additional matter, and then that's it. So probably the one way is that, okay, I already know what is supposed to be included in the audit report, and if there's a modification, where do I need to refer? But now when you will fill the checklist, when you will have to tick and say yes or no, which means whether you have considered all the matters which may require a modification, whether you have used the correct framework, which means which is a gap applicable for you. IGAP, which is your company's accounting standard rules 2006, or the Ind AS. Are you preparing a general purpose or a special purpose? So there are multiple questions, key audit matters. So when you will actually fill those checklists, those will make you think and even revisit your practices, whatever you have followed till now. So I think probably I just want to give you the background and the objective, how these checklists will help you. And because the standards in auditing are mandatory under Section 143(10) of the Companies Act, the checklist issued by the ICA, so they are also in a way, yes, has to be there in your files. I would suggest that probably these checklists, when you perform your audit for the upcoming audits, please make sure that you have documented as part of your working papers. And if you look at the structure of the checklist, you will see that they talk about the work paper reference. And I know Rajiv has already explained that, but just a reminder that the working paper reference, there is a column for the working paper reference also. So whatever document you're preparing or you haven't prepared till now, that will make you think that, okay, I do need to have a working paper around it. So probably that will help you, because auditing is a profession each one of us knows is under the constant watch of the regulator. And therefore, the more and more documentation we create, I'm sure we will have more and more safeguards. And as there is an old saying that what is not documented is not done. So I think with this background, I will straight away talk about the standard. I'm going to cover the 700 series. So this you have already seen, so I'll not repeat. But I'm going to cover the sixth standard, which you can see on the screen. I'll also focus on just the key important point. And at the end, if time permits, then I'll take you to the standard on auditing checklist just to give you a flavor how these have been structured. So the checklist has a section starting from the objective of the standard, the scope to which it is applicable, then talking about the definitions, which means all the definitions which are there in your auditing standards, and then the standard, the requirements of the standard, the responsibilities or the work which we need to perform has been structured in the form of a Q&A, which means now I know what to approach, where to approach, what information I need by taking the help of the checklist. We will just repeat, if anyone has a question, keep on writing in the chat box. Myself and Rajiv, we will try to address as much as possible. And if anything is left, we will definitely take it over later. So this slide, which I just want to show you that, is more about the auditor's report, since we are talking about the 700 series, and which is something, as I mentioned, it's your deliverable, and it's very, very important. So I just want to point out that the main audit report, which is your SS700 report, therein you will provide a true and fair view of the financial statement, and which is requirement of the Companies Act. And then you have the other legal and regulatory requirement. The most important, as you know, there were a lot of discussion around on the books of account, because there was a amendment which happened. There was an amendment issued by MC on 5th August 2022, which talks about the backup has to be taken on a daily basis. So any any regulatory matter which is specified in section 143.3 has to be reported as part of your audit report. And then you have some of the amendments which were introduced last year, your funding transaction, ICAI issued implementation guide around this, compliance with dividend norm, and the audit trail, which is already applicable. The date is now 2023. So you can ignore the date. The date is applicable. It is applicable from 2023. And then you have the reporting framework, the standards which we are going to talk about. Then you have your ICFR reporting, and then you have the CARO reporting. So if you look at the audit report, it is already quite a lot from the auditor. I mean, so much we are reporting on the main audit report. And if I just for a minute compare with the international standard, they just talk about this main report. So unlike India, so they do not have the regulatory matters or probably the CARO, so which is a very detailed report. But again, not going into the detail, just wanted to show the structure. And yeah, this is how your audit report under 700 SA700 looks like. So it starts from the basis for opinion. So this change happened long back, 1st April 2018. So the 700 will take you to the fact, the checklist will take you to the fact that have you formed an opinion? And if you have formed an opinion, are you giving a opinion which is like a true and fair view, or are you giving an opinion which is a compliance framework, wherein you say that the financial statement comply in all material respect with the reporting framework? So in India, since we issue a statutory audit report under Companies Act, and there's a requirement to give a true and fair view, therefore we will follow the fair presentation framework. And then in the audit report, we talk about independence, ethical responsibility, that we are independent of the entity, and we are complying with the ICAI Code of Ethics. So now, through the checklist, again, while you're making this affirmative statement in your report, but when you will actually fill the checklist, you will realize that, okay, fine, you will have to, maybe you will have to set up a system in your firm to get the independence declaration from all the team members. Maybe you will have to open the ICAI Code of Ethics and to see what are the changes, for example, no. So by going through the checklist, you will realize that, the requirement, which was simply you're putting in the report now, has to be demonstrated. Either you need to have some working paper around it. And yeah, Mr. Sanjeev Singhal mentioned about the ICAI has already issued the working paper templates. I think that is something also you should refer and see. Whichever you're not doing so far can be used for your upcoming audits. So then you have the material uncertainty wherever it exists, and the identification of those charged with governance, and your expanded section of the auditor's responsibility. So this is your current, the audit report, and this is how even the checklist is designed in that order. And for the listed entity, you have a separate requirement, SA701. I'm going to cover the standard in a brief of the standard in the next few slides. And if you look at 700, the ultimate objective, as I already mentioned, is to form an opinion on the financial statement. So when I'm forming an opinion, I look at my audit evidence, and the standard talks about that whether we have been able to form an opinion. And this is how even the checklist talks about. The checklist start with the fact that, whether forming an opinion. So whether the auditor has formed an opinion on the financial statement in accordance with the applicable financial reporting framework. So the checklist assesses the auditor with the form and content of the auditor's report issued as a result of an audit of financial statement, and it aims to promote consistency and comparability in the auditor reporting globally, and making information available in a more user-friendly manner. Sorry, So as I mentioned, that the objective, and this is the first question in your checklist, whether you are able to form an opinion on whether the financial statement are prepared. So you will look at the financial reporting framework, and in order to form that opinion, you will have to see whether you were able to obtain the evidence, which means your all assertions you have been able to verify. You have been able to obtain the audit evidence, and thereby you are able to give a reasonable assurance. But again, not 100% guarantee, but yes, a reasonable assurance as to whether the financial statement as a whole are free from material misstatement. And you will express a modified or unmodified opinion based on your conclusions and the audit evidence. So before I move to the next standard, so just want to take you that there's a very comprehensive checklist on 700. There is nothing new in the checklist which you were probably not doing so far, but the way when you will answer the question given in the checklist, and which is running into number of pages, you will realize that, there are many different aspects which can be looked into. So, for example, to give an example, at one of the places, the checklist covers the requirement of signature of the auditor. Many times I still receive a question that, can an auditor be signed sitting in, let's say, in a different city as compared to his or her base office? So I think para 47, and again, for which there is a question also in the checklist, it talks about whether the auditor's report names specific location, which is ordinarily the city where the auditor's report is signed. So the moment I'll say answer to this question, I'll realize that, okay, fine, I have to put the place or the location where I am signing the report. So reiteration of some of the requirement, whether you have considered the going concern, whether you have considered the subsequent event, if there is an auditor's report prescribed by law or regulation. So have you looked at the minimum elements specified by 700? So which means you need to have the title of the report, whether you're addressing to the shareholders, to the board of directors, your opinion section, your identification of the financial statement, independence, and your code of ethics. So again, there are many things which are a part of the requirement of the standard, including the last thing on the supplementary information. So if there is anything additional, for example, non-GAAP measure could be one example, which the management wants to present in their financial statement. And however, there's a supplementary information. First of all, you need to see whether this is something which is not misleading. However, if you believe that is given by the management and it's not audited, you need to clearly call it out, saying that this is unaudited. There is a guidance in 700 also around that. And when you will go through the checklist, you will realize that this is very, very comprehensive. And with this, I'll move to the next standard, the key audit matters. So this standard also came long back, not a new standard, but still very important, because every year you need to identify which are the key audit matters, and it is mandatory for all your listed entities. So when you identify the key audit matters, you will have to determine, you again have to follow the funnel approach as it's there in the next slide, and also being very, very comprehensive implementation guide is there on the SA701. The communicating key audit matters in the independent auditors report. I even get the opportunity to work on this guide and the guide on the reporting standard. The guides are very, very useful. You can go to the IC website and download the guides. So it has even the illustrative example on the how do you report CAM. So CAM is your key audit matter, which you will communicate with those charged with governance. And this intends to address both the auditor's judgment as to what to communicate in the auditor's report and the form and content of such communication. So again, the checklist, how the checklist is designed, it will start from determining key audit matters. So if you're auditing a listed entity and you are reporting a CAM, so the first question which the checklist is asking you to answer, have you determined the key audit matters out of the matters which are required to be communicated to the audit committee or to those charged with governance? And in making that determination, what you have to see, you will have to look at the area of higher assessed risk of material misstatement or significant risk identified in accordance with SS315. Now, this can be your revenue recognition or depending on whatever you have identified, or your significant auditor judgment relating to areas in the financial statement that involves significant management judgment, for example, estimation. If the management is making estimates on valuation, or is management making estimate on impairment of receivables, now that is something that can be a significant judgment area. And the another criteria given is the effect on the audit of significant events or transaction that occurred during the period. Any significant event or transaction, to give you an example, a significant related party transaction. So if I look into these, that will question you whether you have identified key audit matters and prepared whatever form and template, your memo, that these are my matters which I have communicated to the audit committee or to the management or to the board of directors. And out of these matter, these are the matter on which I will be including in my auditor's report as a key audit matter. So that will help you in evaluating. And this is a funnel approach, what I was referring in the previous slide, that first you have to make a list of which are the matters that were communicated with those charged with governance, which means in whichever manner you do your interaction with your audit committees on a quarterly basis, on a 6 months, or whenever you meet with the board of directors to present the key areas which require their attention, which require that communication, even given in SA 260, which is a standard on communication with those charged with governance, you will have to kind of see that, whether those matters have been appropriately documented Out of those matters, you will see which require your attention, auditor attention, where you believe you have spent most of the time on the high-risk areas, require a lot of judgment, and finally, you will reach to some of the matters which are most significant in the audit. So from the matters that require significant auditor attention, you will determine matters which are of most significance in the audit of the financial statement of the current period. This is something very, very important. I want to highlight that CAM is unlike your qualification or your EUM, I can say, emphasis of matter paragraph. It is not written anywhere in the standard that you have to continue the same CAM. So every time the key audit matter, you will have to determine depending on the what is relevant for the current period. So yes, it can be same or it may be different. There may be additional matter. A matter may be removed. But again, that all required judgment, that all required what is relevant for the current period, current reporting period. I think CAM, this is given in the standard, and even the checklist is prepared around that, at how to write CAM. So which means, have you described CAM in the appropriate manner in the correct section? So it has to be placed immediately below basis for opinion section. There is a preamble language suggested in the standard. So whether you have included that preamble language, and if there is a material uncertainty related to going concern section, then immediately below that section. And in this, the auditor needs to describe each CAM under appropriate subheading. So for example, if you have 3 CAM, one is your impairment, second is your revenue recognition, then you will have to give a separate subheading. And if there is no CAM to communicate, CAM section is still required, where the auditors needs to mention a fact that there is no CAM. So for a listed company, if you say there is no CAM, you still need to mention the fact. So now when you will fill this checklist, you will realize that if you were missing on this, for example, you will realize that, okay, yes, this is also required. And do not include in CAM references to disclosure of other information outside the financial statement. So this will also remind you that you can include reference to notes to the financial statement in your CAM. While explaining your CAM, you can give reference to the notes to the financial statement, but not the information outside the financial statements. So some of the general points which to be keep in mind, the purpose of communicating key audit matter is to enhance this. You all know all the background. So much discussions happened, and I would strongly recommend all of you to go through the implementation guide also. Communicating key audit matters will help definitely understanding, because till now, before key audit matter, the focus was more on the modifications or on the emphasis of matter paragraph. Now with the additional key audit matters for the listed entities, at least the user or the investor or the regulator can see which are the key significant areas. And this is not a substitute for any disclosure made in the financial statement, for any modification made in the financial statement, for any EOM, or for any kind of a modification. So which means I would have to retain my other reporting. I will have to follow my other reporting standard. If it's a modification, it will be covered as a modification and not as a key audit matter. So, if you believe that no key audit matter, then I already explained to you, you still have to make a statement, and you will have to see what is relevant for the current period, and you're not required to update basis your previous period auditor's report. So before I move to the next section, I would reiterate the standard is very, very comprehensive. The guide is already there. Now, the only change what is happening when you fill the checklist, you will realize that the moment you will fill the checklist, you will realize that what is additional needs to be done, or what additional documentation has to be there in your files. So for example, there's a requirement in SA 701 that if you are giving a disclaimer of opinion, overall disclaimer of opinion, you cannot give a CAM. So CAM cannot be given in such a case. So that will again trigger you. Okay, you cannot give a key audit matter if there's a disclaimer, and there is even the illustrative language given in the standard which can be followed, and the minimum documentation. So in each of these standard and in each of the checklists, the minimum documentation is there. What you have to maintain as part of your working paper. So as I explained to you in 701, you will have to talk about the communication with those charged with governance. The matters by following the funnel approach, which are the matters which require significant auditor's attention, and out of the matters which you decided to include in your auditor's report. Now with this, I'll move to another very important standard, modifications. So modification 705. So if you are modifying any audit report because you believe that the financial statement as a whole are not material from not free from material misstatement. So, for example, you believe that the provision should have been made for any recoverability of the receivables, the provision. However, the management has not paid the provision and they have their own rationale to believe. So, yes, you need to understand what is their explanation, but you need to exercise your judgment and see whether they are able to provide you any evidence on which you can rely or which you can test. If no, the answer is probably you will need to modify the audit report. And the second is you're not able to obtain the evidence. So, for example, there's a scope limitation. You're not able to obtain the evidence around it. You have no access to the agreements. You have no access to the books of account. It could be anything. The management imposed limitation, or it could be even beyond the management, wherein the management has not imposed a limitation because of in a technical glitch or anything which has happened with the company. It might be possible that the company does not have that information which can be audited or can be shared with you. In that case, it can be a scope limitation. So again, just a reiteration, what you need to remember, if you're qualifying, you're issuing adverse opinion or you're issuing a disclaimer of opinion, this is the standard wherein you need to refer. And so when you will fill the checklist of 705, you will start with that. Have you modified the opinion when the auditor concludes that the financial statement are not free from material misstatement, or you're unable to obtain audit evidence? So, so you will have to, complete the checklist in that flow and keep on answering and submitting. And then the standard talks about, and the checklist as well, that the qualified opinion is issued when you have not obtained sufficient evidence or you're unable to obtain such evidence. And adverse opinion when it's not true and fair, which means you believe the misstatement. The misstatement is both material and pervasive. Pervasive is defined in SA 705, but to give you an example, if the item is of such a significance that it will impact the financial statement substantially, impacting, there is no threshold, but it could impact your, for example, 90% of your balance sheet or your asset size or your revenue. It could be material and pervasive, depending on what is the situation. You will have to exercise a judgment. And if there is a scope limitation, you will have to issue a disclaimer of opinion. And as I mentioned in the previous slide, in the disclaimer of opinion, you cannot issue a key audit matter. This is a table, a very useful table, not new, but you always have to remember when do you need to qualify, or when do you have to give the adverse opinion, or when you have to give a disclaimer of opinion. Now, if after accepting the engagement, the standard talks about there is a limitation which you are not aware of earlier, then you will have to see that whether you can issue a qualified opinion, you can issue a disclaimer of opinion, or if the management does not cooperate with you, they refuse to remove the limitation, you will have to see whether you need to withdraw from the engagement. But before withdrawal, you will have to keep in mind all the regulation. There is a SEBI circular, there is a SEBI regulation on the resignation of auditors, there is an ICA guide. So you will have to keep in mind everything. So you cannot just move out and not report. Yeah. So so that you have to keep in mind. But the standard talks about that if there's a limitation on scope, the auditor needs to evaluate what is the reporting implication, and that you need to mention here. So 705 is again I can say the standard for all your modification. Wherever there is an issue, you're not able to get the sufficient evidence, you will have to look into the reporting, and how to report is also given in the standard. So you will have to see that it has to be given in the, so your opinion paragraph, basis for opinion, will be converted into basis for modified opinion. And your starting paragraph opinion will be a modified opinion. So you will have to keep in mind that if there is a modified opinion, then you're not missing out on how it should be reported. And if there's a disclaimer of opinion, then what are the things which you need to keep in mind. It has to be brought out clearly. And communication with those charged with governance, I think that is something which is very, very important, which you have to keep in mind before including the qualification. You should have a communication in writing with the management, with those charged with governance, the audit committee, to understand their responses. Why do they believe that should not be there, or do they have any additional explanations to give? With this, I'll move to the next slide. Next standard on 706. Very, very important standard, I know, widely used. And at this point, I would also like to highlight that a very good publication was released by Center for Audit Quality on the significant audit matters. So I think that is also one very useful publication which can help you when you will do your year-end audits. So what you need to remember here is that one fine point: the emphasis of matter paragraph should not be used in lieu of the modification. I've noted in many places that the auditor wants to include, because there is a lot of pressure from your client or from the company that it should not be a modification, and the auditor many times want to include it as an emphasis of matter paragraph. So please note that though now the detailed checklist is also there, the standard remains unchanged. EOM is only when you agree with the management, when you believe that what the management is doing is right, and they're making a adequate disclosure in the financial statement, and you are just drawing attention to it because you believe this is relevant for the users. So the moment you include an emphasis of matter paragraph, it is very much understood. It means you agree with the position taken by the management. It cannot be, in lieu of the modification. So any such matter which is fundamental to users' understanding has to be included as an EOM. And there is a other meta paragraph also. For example, a very common other meta paragraph is if in a group audit, the components are audited by other auditor. So you include the other meta paragraph. I think that's a very routine day in, day out. So, and if you expect to include an EOM and OM, and then you have to communicate with those charged with governance. So this is even how the checklist is structured. If you are including any EOM and other matter, then you will have to, this checklist will be relevant for you. So what the checklist says that whether you have identified a matter presented or disclosed in the financial statement that in the auditor's judgment is of such importance that it is fundamental to users' understanding. And if yes, whether you have included EOM, and it should not be a substitution of the modification, and it should not be a substitution of the key audit matter. So you will have to, when you will go through the checklist, you will see that it will talk about when to include. And I think this I've already explained to you. EOM is which has been adequately disclosed. Other matter is something other than what has been presented or disclosed in the financial statement, but still it is relevant to users' understanding. So unlike EOM, there will be no note or disclosure in the financial statement for the other matter paragraph. So communication with those charged with governance about the paragraph to be included provides them with an opportunity to obtain further clarification from the auditor where necessary. The areas in which EOM can be given, to give you a few examples. For example, when a financial reporting framework prescribed by law or regulation would be unacceptable, but for the fact that it is prescribed by law or regulation. So to give you a very common example, the accounting treatment approved by the Coder scheme. Now there is a clear-cut requirement that the auditor's certificate has to be given along with each of these schemes submitted to the NCLT. However, still, if you believe that the approved scheme has a violation, is not in line with the applicable financial reporting framework, then the standard says that you have to include an emphasis of matter paragraph, bringing out what is not in accordance with the financial reporting framework. The second could be when facts become known to the auditor after the date of the auditor's report, and the auditor provides a new or amended auditor's report, which means some facts were not available when you signed your report. But later on, for example, an investigation was going on for a whistleblower allegation or a fraud. And then by the time you signed off, it was not concluded, but later on it got concluded, and you need to revise the report because it is of a significant subsequent event. Then in that case, the standard says you have to include a EOM emphasis of matter paragraph explaining the subsequent event. When there is an uncertainty relating to the future outcome of exceptional litigation or regulatory action, I'm sure you will remember that there are a lot of EOMs given during the time of COVID. Many people have given, many professionals have given and there was the ICA guidance around the entire reporting guidance during the times of COVID. So that is one example which I can think of. And whenever there is any early application of a standard, that could be another area. So that is something which, on the EOM, appropriate heading has to be given. Again, when you will fill the checklist, the question will be whether you have included the EOM, the emphasis of matter paragraph, or the other matter paragraph with a separate section of the auditor's report with an appropriate heading that includes the term emphasis of matter. So you have to give a heading thereon. And whenever any other framework is being used, then also emphasis of matter paragraph is required to be given. Yeah. So I think this is on the emphasis of meta paragraphs, and on the other meta paragraph, I think I gave you an example of the where the reports are where there are more than one auditors involved in a group audit. The group auditor will report that the other components have audited. The other example could be that there is the previous year is audited by other auditor. So that's again a factual statement, and you will do your opening balances procedure. But for the fact that the previous year is audited by another auditor, you can include an other meta paragraphs. So that is something on the two standard 705 and 706, and the documentation which you have to keep in file for all your modifications. So that is goes without saying. Every standard will talk about require you to maintain documentation. And now this additional checklist will be there in your working papers along with the working paper reference. So for example, if you're making a modification, the corresponding memo or whatever note you have prepared for the basis of the modification, that will be referenced. Moving on to the next standard on the comparative information. This is also something very, very important and relevant to standard, and I'll give you examples where this is used. So so this checklist it provides guidance on to obtain sufficient and appropriate audit evidence whether the comparative information included in the financial has been presented as per the applicable financial reporting framework. So all of us know that Schedule 3 requires you to present the corresponding information for your comparative. In India, it's called the corresponding figures framework because we are not giving opinion on the corresponding figures. We are only reading it in the context of the current year. So whenever, the 710 is on comparative, it says the auditor has to see whether the comparative has been given in accordance with the applicable financial reporting framework, which means, and I will still have to see whether it is in accordance with the Schedule 3, whether it is applicable GAAP, Ind AS or Indian GAAP, and then I'll see that whether it has been presented. The standard also talks about, I'll also have to see whether there is any modification in the previous report. Now, there could be two situations. The modification is there in the report for the previous year, but that is either resolved or not resolved in the current year. Again, there could be further two combination. The previous year audited by another auditor, and I am the current auditor. So the previous auditor is a different auditor and issued a modified opinion. And now, as a current auditor, I'll have to see whether the modification has been resolved or not. The other aspect which is covered by this standard is that if there's a restatement. So, for example, if the previous year numbers have to undergo a change, a restatement, revision because there was an error in the financial statement the previous year. That could be, and the management detected in the current year. So in that case also, the standard gives you guidance that if there is such a restatement or there is some error like this, then probably you will have to see whether the matter has been appropriately resolved, which means disclosures have been given, it has been presented correctly in the previous year as part of your comparatives. And in that case, you may include an emphasis of matter paragraph explaining the restatement. So there is a detailed guidance in the Ind AS, and I'm not going to cover the guidance here, but you can refer to Ind AS 8, which requires the which gives the guidance on how to restate, what disclosures has to be given. So this standard is all about what I just explained, but it also gives the checklist also is prepared in such a manner. So as I mentioned, in India, if you refer to the footnote to SS710, they talk about it. In India, we generally follow the corresponding figures framework because they are included in the current period. The comparative figures are included in the current period. Financial with the intention to be read only in relation to the amounts and other disclosure relating to the current period. So comparative is not relevant for us, but yeah, there is a guidance in the standard for the comparative financial statement also. So if the prior period financial statement were not audited, okay, it also deals with a situation where the previous year financial statements are not audited and you are the auditor appointed for the current year. Then in that case, you have to clearly bring out that the previous year or numbers are unaudited. However, that does not relieve you from the responsibility to obtain sufficient appropriate audit evidence for the opening balances. Because if your opening balances are incorrect or they have misstatement, how can you give a true and fair view on the current period numbers? So that is something still, whatever work you will perform here, still you can give this other matter paragraph that the previous year is unaudited because there is no audit opinion issued for the previous year. So this standard gives you that guidance, and the checklist also has a corresponding question. When we give the auditor's opinion, we do not talk about the previous years. For your March 23 opinions, you will not talk about your March 22 opinions. But yes, you have to see whether the corresponding numbers have been presented as per the applicable framework. And if there is a modification, let's say there is a modification on inventory in the previous year, you are not able to obtain sufficient evidence about the existence, or there's a revision which should have been made but not made in the previous year, and you issued a modified opinion. However, in the current year, management give you that evidence, or they have made the provision, whatever the case may be, which means the matter is resolved. They have addressed it, and you are also fine with this. Then in the auditor's opinion on the current period, you need not refer to the previous modification because that has been resolved. If it is unresolved, management has not given the evidence, the provision is still not made, which means you will qualify both for your current period as well as for your previous opinion. Which means you will make a reference to the both the years, and there is a specific illustration given in one of the appendix 2710, which you can refer. So that is something if the modification is unresolved. And so when you will go through the checklist, this is on the comparative information, what you need to remember. I did explain to you that if it's audited by another auditor, then also you can include that the previous year number have been audited by other auditors. And if there's a restatement in accordance with Ind AS 8 and in accordance with the framework, then you will have to refer to this standard. So I think this is again a very, very important standard which you have to keep in mind if there is any modification in the previous year. And when you are issuing opinion for March 23, but you want to understand what are my responsibility for the comparative number for the corresponding figures. With this, I'm moving on to the last standard on the other information in the 700 series. Now, what is other information? I think we debated a lot around this, and even there is an implementation guidance 720 also, which you can refer, a very detailed guide. So 720 was issued and the standard was revised before this guide. So what happened? The information, the standard was revised by there was revision in the international standard, and which requires the auditor to read the other information and to see what the auditor has to see. The auditor has to consider whether there is a material inconsistency between the other information and the financial statement. So this, what you can see on the first bullet in A, was the requirement of the earlier standard. But later on, they expanded and they said that you also have to see whether there is any material inconsistency between the other information and the auditor's knowledge obtained in the audit. And if that exists, then the auditor has to respond appropriately when the auditor identifies that such material inconsistencies appear to exist, or when the auditor otherwise become aware that other information appears to be materially misstated. Now, what is this other information? Now, other information could be any of the document which is outside the financial statement. So, for example, your annual report. Annual report is a classic example which is included, and in that, wherein the financial statements are included, your board report, everything, which is forming part of your overall financial statements, within the purview of the fact that they will be included as an overall document from the company. So any such financial or non-financial information included in an entity's annual report will be considered as other information. And if I just want to add here, the current, you want to think of the example of the BRSR, Business Responsibility and Sustainability Report. SEBI circular, the SEBI regulation talks about that top 1,000 listed companies have to include BRSR as part of the annual report. Now, because the SEBI circular talks about that it has to be included as part of the annual report, and the company are including it as part of the annual report, the auditor is required to even read the other information included as part of the BRSR in the annual report. However, if you go through the standard, it also gives at one place if this report, sustainability report or the BRSR report has been included separately other than your annual report, then probably it may not be covered within the auditor's purview. However, if you see anything or everything, the way standard is written, it talks about that the annual report, all the documents included in the annual report will have to be read by the auditor. So that is something what you have to see. The standard is not asking you to audit those non-financial information or the additional document. What is being written here is that you have to see that there is no material inconsistency. So to give an example, if there is a number or the amount which have been disclosed in the financial statement, or you believe were there in the books of account, or you have seen when you were auditing, is not in agreement or is very much materially different or is different from what has been disclosed in the non-financial or in the annual report, then you need to point it out. You need to communicate to the management and then see whether they're addressing it or not addressing it. And if the management is not addressing it, then probably you may have to qualify. So the standard gives you ample of detailed guidance. You can even go through the implementation guide and see whether any additional procedures are required. So, yeah, these responsibilities were enhanced when the standard was revised, and even the guide, even the checklist refers to that. And expectations, what you have to mention and get clarity with the management and agree with the management that they should give you the draft annual report or the board report before the audit report is finalized. And you will have to, so that you have sufficient time to read it. And in case some of the information is not provided to you during audit process, you will have to mention this fact on the audit report. And also you will have to obtain a written representation from the management that the final version of the outstanding document, if any, will be available to you prior to issuance by the entity. Now, what constitutes other information, I think I explained already. For a private company, it could be a director's report, listed company, it could include even your business responsibility report, management discussion analysis. All the document will be part of your annual report. For obtaining other information, you will have to talk to the management upfront in advance. So you identify what are the documents you need to read, make appropriate arrangements. So make sure that you have a particular clause in your engagement letter so that you can obtain the annual report and the other information in a timely manner. And if they're not available, then you need to obtain a written representation. So when you will fill the checklist now, so the checklist will ask you, have you obtained a written representation for the document which have not been provided to you before you have issued the audit report? And if you say yes, then yes, you're good. You have obtained the representation. The moment you say no, then it's something which is a non-compliance with the standard, which means the standard requires you to obtain a written representation, but you have not obtained. So probably this is, one thing on the this thing. And yeah, and if there is a material misstatement in the other information, the checklist will take you to the steps or the guidance given in the standard or what you're required to do, that you have to consider the implication for the auditor's report and communicate with those charged with governance about how the auditor plans to address a material misstatement in the auditor's report. And in some cases, there may be a situation you may have to withdraw from the engagement, or where withdrawal is possible under applicable law or regulation. So again, that is something which you need to keep in mind, that if there is anything misleading, you will have to be upfront in your communication with the management. Other information have to be reported in a separate section. The illustrative manner of reporting is given in the standard as well as the implementation guide. So they give you illustrative example also for an audit of financial statement of a listed entity. You will have to mention the fact that what you have obtained as other information, which means you will have to mention that the annual report or the board report. You will also have to mention what you have not obtained. And for an audit of the financial statement of unlisted entity, you will again have to mention what is the other information. As I mentioned, it will be board report or the director's report. And if there is any qualification because of other information, you will have to explain. You will have to explain in line with the guidance given in the standard. And and there's a documentation, as I mentioned in the other standard, the standard. So the checklist will also ask you at the end of every completion of the checklist whether your audit documentation include whatever procedures you have performed for your 720, which means have you how you have read the document, have you obtained the document, you have ensured factual accuracy, you have checked it with the information you have obtained during the course of the audit, and the final version of the other information on which the auditor has performed the work. So that should be the draft final version has to be part of your working paper. That is a requirement in the standard. I think, so that's all from my side on these standards. But if you have any questions, we can take it up. And yeah.
Thank you, ma'am. Thank you for such a nice and meaningful deliberation. I think due to some technical issue, earlier my voice was not clear. I apologize for that.
No problem.
If any member has any query, it can be asked now. Ma'am, I want to ask from you. I have a query from a member. What is the time period for which we need to keep audit working papers, etc., with us? whether it will remain same or will change as per audit type, that is tax audit, stock audit for banks, etc.
Yeah, okay. Thanks for asking, but we have a requirement in the standard. As of now, we have SQC1 and the standard on documentation. And there's an ICA announcement also on the working paper retention, which requires us to keep the document for a period of 8 years. So when you say the other documentation, so you will have to maintain, yeah, when I say audit, be it tax audit, be it statutory audit, or be it your other audit, you will be governed by the ICA framework. So my understanding is that you will have to maintain it for the same period.
Thank you, ma'am. And as audit trail requirement postponed to 1st April 2023.
Yeah.
The same is required to be given in the report.
Yes. So audit trail, I think, yeah. Again, we worked on this implementation guide, and there's a reporting format also given there. And so from for your report, which you will do in your March 24. So it will be reported in your March 24 report, not now. In your report on other legal and regulatory requirements, clearly calling it out whether the audit trail has been operating effectively throughout the year. So the wordings, what I'm required to report as an auditor is given in the rules itself. So it's a part of the Companies Act rules, and the implementation guide can be referred, which has plenty of examples of the reporting, modified reporting and modified reporting.
Okay. And ma'am, the other question is, do we require to mention the in the report for periodic data backup? Periodic data backup.
So I think if you look at the while ICI, there is no guidance on this, but if you look at the 5th August circular issued by the MCA, it clearly says that whether the company has been maintaining backup on a daily basis. Yeah. And if you look at the auditor's responsibility, section 143.3 talks about that the auditor has to specifically say whether the company has maintained proper books of account in accordance with section 128. So if you read the two together, it clearly goes to show that I have to see whether there is a daily backup maintained by the company, whether the server is in India, and if there's any non-compliance, I will have to call it out in my report on other legal and regulatory matters. Because as an auditor, I have to see compliance with the section 128. And 128 rules are the relevant rules under which the circular was issued.
And one more question, ma'am. In a case, a holding company gave certain loans to its subsidiary, and in its annual report, the amounts are shown as non-recoverable.
Yeah.
While the IFC report states that IFC are not are in order. Is it in order not to make any mention of such non-recoverability in the IFC?
So I can understand the question where it is coming from. So I think this is very judgmental. I would say there's a guidance note on IFC issued by the ICI and the implementation guide on the reporting standard. So mostly in most of the cases, if there is a qualification in your main audit report, so if the question is that there's a non-recoverability, I would presume first of all the auditor will make an assessment whether it's a non-compliance with my, and there should have been a provision, then in that case, I would modify my main auditor's report. And if there is a control issue, because I'm not able to obtain the evidence, then there will be even a modification in the IFC report. Now let's presume the situation the other way. I have been able to obtain substantive evidence. However, my IFC report is modified. So I think one should refer to the guidance note and see, what is the implication. Whether there is a implication on my main auditor's report. So that's a very subjective. So yeah, Rajiv is also here. Rajiv, do you want to add anything to this?
You have well captured your thoughts, and this is the way, because I understand, if there is a default in repayment of loan, but that may not necessarily be because of weakness in controls. It could be liquidity issue also, which is sometimes is not in a control parameter actually. So it has to be evaluated in entirety before making any comments on these kind of situations.
Yeah. Okay.
And ma'am, one last question. While doing bank branch audit, we have to use the work of internal auditor, concurrent auditor, internal inspection. But due to time limitation, we all have to rely on their respective reports. What major precaution to be taken care of?
I'll request Rajiv to answer this question.
Sorry, you'll have to repeat the question. I thought.
Yeah, okay, sir. Right.
Sorry.
Sir, while doing bank branch audit, we have to use the work of internal auditor, concurrent auditor, internal inspection. But due to time limitation, we all have to rely on their respective work reports. What major precaution to be taken care of, sir?
At least you can. I know the bank branch network is very vast, but having said that, the number of branches which is being covered under audit is reducing, because of the mechanism under which the branches are selected now. While it may not be possible given the time frame to review everything, but you can definitely ask for a meeting in advance, and the bank can facilitate to have a meeting with your branch auditors and maybe the internal auditors of the critical branches to set your expectations so that maybe they can deliver on those expectations, and then probably on a sample basis you can review some reports. Reading of reports is very important, even if the time is not on your side, but at least you should have a process to make sure that all the reports which have been delivered have been at least read, so though you don't miss on any significant findings or reporting by these experts or branch auditors or internal auditors.
Okay, sir, one small question from you, sir. Some companies did not comply with Provident Fund and ESI Act, sir, PF and ESI Act. What is our role in this matter, sir?
Okay, so there is a requirement of reporting under CARO on statutory dues and stuff like that. Plus, the new provision on no clerk or non-compliances with the laws and regulation, which is applicable to the top listed companies. But still, I think there is a lot of framework which requires you to not only check these compliances, but also to report on non-compliance.
Thank you, sir.
And even the SA 250, I would like to add, we have the standard on non-compliance with laws and regulation that one can refer. Yeah.
Thank you, ma'am. It was really a great and meaningful session. I hope you all learned a lot from today's webinar. I'm very much thankful to both the speakers for making excellent presentations and making this webinar interesting and meaningful. Thank you very much for gracing your important work and sharing with us your findings and opinions today. I deem it a great honor to propose the vote of thanks to all who have helped us in making this webinar such a success. I consider it a great privilege to propose a vote of thanks to all the dignitaries who have witnessed it as a memorable and successful event. I am also very much thankful to all the active participants. Now, I think we should go for conclusion of the meeting. I request Anil ji from Accounting Standard Board to please give his concluding remarks.
Anil Thank you so much, sir. Thank you so much, Chairman Pranavit Bran, sir. On behalf of Auditing and Assurance Standard Board of Institute of Chartered Accountants of India, I extend my heartiest thanks towards both these speakers, Sri Rajiv Saxena ji and Madam Deepa Agarwal ji, for sparing their valuable time and enlighten all of us on various intricacies on SA 600 series and SA 700 series. We have covered we have covered all the checklist part relating to 600 series and 700 series. So once again, on behalf of AASB, thank you so much, ma'am. Thank you so much, sir, for sparing your valuable time. And I also thanks to the Honorable Chairman Panipat Branch, Sri Mitesh Malhotra ji, for sparing your valuable time and moderating the whole session of this 2 hours webinar in a very lucid manner. And hope there was some technical glitch, but at the end it was perfectly fine, sir. So no issue, sir. Thank you so much on behalf of AASB. And I also thanks all the participants of today's webinar. Around more than 1,000 participants are still live for this webinar. So thanks to all the participants of today's webinar also. Thank you so much, ma'am. Thank you so much, sir. Thank you so much, Honorable Chairman Panipat Bran, sir. Thank you so much. Thank you. Thank you.
Thank you.